Hello, I'm Kimberly Romaine, Editor-in-Chief of Unquote, Europe's longest-running private equity publication. I have with me here today John Holloway, Director at the European Investment Fund, Europe's largest venture investor. John, thank you very much for being with us here today. Unquote is celebrating its 20th year this year, and you are actually celebrating your 12th year at the EIF, so congratulations for that. I wanted to know how you've seen the industry change in the last 12 years, the time that you've been in it.
Well, first of all, congratulations to Unquote as well. 20 years is no mean feat. What have I seen in the last 12 years? If someone had said to me in September 2000, this is what the world will look like in September 2012, I think I would have had a lot of difficulty understanding or seeing what has actually gone on in these 12 years.
There's been so much change.
It's been utterly amazing, either on a macro level or a micro level, events which have affected European Union venture capital. And I think, unfortunately, the majority of the events have not been positive for VC. They've been much the opposite. And just to think of a few examples, we had the burst of the bubble in 2001, and the effects of that I'll not say they're incalculable, they're now becoming, 12 years later, extremely visible. We've had an Iraq war, we've had stock market crashes, we've had the Euro debacle, we have enormous regulation being attached to the industry. I don't think any of these things could have been reasonably foreseen back in the year 2000. So the European Union venture capital industry, this might sound contradictory, counterintuitive, but actually I do believe that in 2012 the European venture capital industry is much stronger than it was in 2000. And in 2000, 2001, it was still raising substantial amounts of money, far too much money, the majority of which was lost. And as I say, that has lasting effects on the way the industry has worked in the meantime.
Well, we've had a bit of a Darwinian shake-up, haven't we, since then?
Absolutely.
Far fewer players. Which
I think is fair. If I look at the portfolio that EIF had at the end of, say the middle of 2001, and the portfolio EIF has 11 years later, of the venture capital fund managers who were in that portfolio 11, 12 years ago, more than half of them aren't there today, because they simply were not able to raise a successor fund, and there were very good reasons why they could not. On the other hand, my positive side to this is that, particularly since the real crash in 2007, when some very bright people were released, particularly by corporates, some of them came together, formed teams, first-time teams, with a lot of individual technical and financial expertise mixed together. And they are, for me, today's generation for the future development of venture capital in Europe. And what I see in our portfolio, what we've invested in, the strength of those companies, admittedly today very much on unrealized investments, but looking at where they've put their money, how they've researched it, due diligenced it, where they've chosen to invest, leaves me feeling much more optimistic that when those companies are ripe to be sold, which isn't yet, it's too soon, and maybe in 2-3 years it will be right. Hopefully in 2 or 3 years the world won't be the way it is, least of all in Europe. And those venture capital managers today will be able to sell companies which they bought at relatively low valuations, have been able to develop, and will be able to sell them at a reasonable price when the time is right. And that way, European venture capital, maybe I'm a pipe dreamer here, but this is what I genuinely hope, that within 3 or 4 years' time, European venture capital will be back in the press for the right reasons, not the wrong reasons. We'll be talking about performance, because everybody talks about performance of European VC. And I think we'll have a situation where we'll have a performance starting to grow that we can be proud of, rather than constantly having to defend a set of composite statistics for the past 10 years from whichever house provides the statistics, which gives, for a good reason, a number, the return numbers, which are simply not going to inspire anybody, really, in the private sector or institutional investors to say, European VC is a place I want to make my investment.
We are starting to see signs of some exit momentum building up. Unquote has recorded a number of phenomenal venture exits in the last 2 years. And a lot of it is from the industry heavyweights you would expect, but there have also been a sprinkling from some brands which aren't as well known, which is refreshing. I mean, we've got some firms have had between 4 to 7 exits in the last 18 months.
Indeed.
From the venture community,
Right,
which is phenomenal. We've seen half a dozen fund closes in the venture community, interim or final, as well as one fund actually reopened because the investor demand was such that was what they decided to do. So maybe this is the start of what you're saying we're going to see really come to fruition in 2 or 3 years' time.
I think it is true, and I think what you touched on there and what you've alluded to is the most important thing which wasn't happening in the past, and that's selectivity. At the turn of the millennium, there was no real attempt to be selective because the investors, to a large degree, have disappeared. The ones who are willing to stay and have a look are being so selective, and this follows the Darwinian principle we were talking about a couple of minutes ago, that those teams who are able to raise money today really are pretty damn good.
EIF has been investing beyond venture. You've been investing in lower mid-market and growth opportunities since, I believe, 2005.
That's correct.
Therefore, you've got a nice, well-rounded view of the fundraising market. You see how your GPs interact with other LPs, the momentum that goes into fundraising or lack thereof. What would you say has changed in the last 5 years from a fundraising point of view? Just going back 5 years, so since the world got more difficult, have your expectations as an LP changed? Do you expect to be rewarded for going in at first close? Do you expect reduced management fees?
EIF is a slightly different animal from your normal investor. If we are happy to back a team, we will not necessarily seek preferential terms. We will not normally seek some kind of sweetener, reduction in management fee, whatever.
What about the attitude that you're seeing from some of the other LPs in the funds that you invest in? Are you noticing them being slightly more aggressive?
Yes, they are, because at the moment, if we talk about the pendulum and the ups and downs of the relationships and this strange marriage which is called LP and GPs, there are moments when one party is deemed to have a stronger position than the other. At the moment, with the flight to quality, the very best GPs are still in a very strong position, perhaps not as strong as they were a few years ago, because there are less LPs than there were. For some GPs, life is so difficult to raise money that the LP is in a position to say, well, actually, yes, I'd like this and this, otherwise I won't come in. But really deserves attention is the question of the contribution from the GP himself, because we all use this phrase, alignment of interest. And I find it difficult really to understand that if the LPs are putting in 99% and the GP puts in 1%, then that to me is not really an alignment of interest at its most basic level. So one of the things we do like to see, we think it's genuinely justified, is the GP contribution is higher than the classic 1%. Give
me a number. Unquote's been recording some at 4, 5, 6, 7%.
Again, look at our starting point is the team. It's the human beings. Who are they? Where have they come from? What have they got in the past? If someone has a substantial net worth, which has been wherever he's got it from,
they lack the hunger.
And they may lack the hunger. But if we know there's someone who's had carry from previous funds, and let's say they're raising the 3rd generation, and number 1 is in carry, number 2 maybe not far away, who knows? It's just a hypothesis. And we know that. We've probably invested in them. We know what they've done. And they come along and say, yeah, we'll put in 1% as usual. Well, we're not going to be too happy with that. And that's one area where we are looking at trying to do better than in the past.
We've been talking about the past and where the market currently stands.
Yep.
Where do you see the market going in the next 10 years?
I'm actually more optimistic than I've ever been. And to most of the people who may see this video, they might think this man is slightly off his rocker. But on the basis of, I can only talk for our portfolio, because that's all I have as concrete evidence.
So we're talking about venture and lower mid-market in Europe.
I'm talking about specifically the venture part of the European Investment Fund portfolio, which is probably over 2.5 billion of gross commitments. So I'm looking at them, and I see where that money has been invested. As I said earlier on, the teams which have come along since 2006, since the crisis really started to bite, are doing good things. They're not investing the way that venture capital funds invested in 99 and 2000. They're being much more careful, infinitely more careful. The due diligences are taking longer. They're checking things out much better. And if I look at our portfolio and the valuations on unrealised, these are valuations on unrealised, that our VC managers who we've been with for the last 5 to 6 years, the valuations are looking pretty good. They're not inflated. We're quite happy with the way it's looking, and certainly a whole lot better than the first 5 years of this millennium. So, assuming they'll be able to grow those companies and sell them, I think the returns should be there, but it won't be for the next 3 to 4 years that we'll start to see significant changes in European VC. But I'm convinced it can come because I see the companies that are being invested in and they look pretty good.
Thank you very much for taking the time to speak with us. Thank you very much for watching.